Hello, I'm Angeline and welcome to Beat the Street, the show that gives you all the tradable news and data you need ahead of the open. Coming up, NFP, will this jobs report be too cold, too hot, or just right? And diversifying, Nvidia and Apple both look to change up their manufacturing base even further. And from the skies, Boeing signals of a 2-month delay to its 737 production ramp-up is in sight, say sources. We'll have a look at what implications that has on its shares. Now, good afternoon. I'm Angeline Ong, and welcome to this new edition of Beat the Street. Not long now before Wall Street starts trading, and we just got those numbers out for you, the NFPs. For the month of November, we were looking out for 180,000. We got 199,000 instead. Private payrolls pretty much bang in line with expectations. 153K expected. We got 150. But it's actually the average earnings that's actually probably more interesting. For the month of November, month on month, we were expecting 0.3%. We got slightly above that, 0.4%. And for the year-on-year figure, 4%, bang in line with expectations. The unemployment rate, also close to what was expected, coming in at 3.7%. Let's cross live to Axel Rudolph now, who's been watching the reaction for us. Some early thoughts, Axel?
Well, the number came in much stronger than we expected with regards to non-farm payrolls. And you can see the effect of that on the 1-minute euro-dollar chart. So the US dollar actually strengthening on that strong jobs data. And interestingly enough, once again, the earlier this week JOLTS number and also ADP number didn't give us a good indication of what the non-farm payrolls number would be, because those actually came in lower than expected. Whereas here we have a much higher number, as you just said, Angeline, 199,000 compared to a forecast of 184,000, I believe. So on that, euro dollar coming off. But what is interesting from a technical perspective, if you look at the daily chart, we are actually in the process of falling through minor support, which has held the currency pair for the last 2 days, as you can see here, going back to the early November high at 107.56. And right now we're trading below there. If we were to close below that today, that is to say Friday on a weekly chart closing basis, it would really indicate that that decline we've seen from the 110 high we saw earlier in the month, or at the end of November, I should say, is likely to continue and should then take us back down, not just to the orange line in the 55-day simply moving average at 106.92, but perhaps even all the way down to the mid-October high towards 106.39. So further downside looks likely for euro-dollar on that US dollar strength.
Now, Axel, there's a school of thought out there that actually says, you know what, despite the data that we've had out of the US labor market this week, actually it's not as weak, and maybe perhaps there is tightness in certain sectors like services. Do you think we might get a different figure than next NFP? Perhaps, you know, we're seeing this weakness, but is it a blip? Are we going to see the US labor market give the Fed less reason to actually come forth and cut rates as markets have been hoping early next year?
It may well happen. I mean, we've had a swift change anyway over the last 6 weeks or so, from expecting the first rate cut, for example, by the Fed to be seen in May of next year. Then that was brought forward at the end of October, beginning of November to March or April time now. And perhaps it will go back towards May. So we'll have to see. But as you say, one set of data is not going to change the trend. And we'll have to see what the Fed does with regards to wage growth, and also with regards to their monetary policy in general. So yes, is the answer basically to your question.
Thanks very much, Axel. And indeed, the trend is your friend, especially in technical analysis. Let's just get you across the reaction that is coming through hard and fast now. US stock futures and also on our IG platform indicating the extension of declines after that November non-farm payrolls print. Also checking in on some moving stocks now. I can tell you that Qualcomm, which is an all-session stock on the IG platform, well, that stock is currently down 0.2%. You can trade this all sessions, of course, down 0.2% ahead of the cash open after Morgan Stanley downgraded the chip firm to equal weight from overweight. Also looking at Lululemon Athletica for you, because this one is not all sessions, but it'd be interesting to see what happens when trading gets underway. The premium apparel retailer forecasting fourth quarter results that were below expectations. Now, one of the key things in the tech industry that we've seen in the last 18 months is diversification for stability. Now, NVIDIA is in talks with Malaysia's YTL. This is the huge conglomerate on a data center deal. This is according to sources by Reuters. Apple is to move its key iPad engineering resources to Vietnam, reported the Nikkei. Now, these two stories are not uncommon. We've had quite a few months of many companies looking to move output away from China into places like Vietnam, India, Indonesia. Foxconn and Luxshare are two names that come to mind that have diversified production further away from China. Just checking in on NVIDIA's shares for you, and it's currently down around 0.33%. And also just quickly checking in on Apple, because Apple is all sessions, and Apple is currently down 0.1%. Now, turning to the skies, Boeing declining to comment specifically on the story, but I can tell you that there are signals or signs that it's run into issues with the 737. Boeing has declined to comment specifically on the new master schedule, but Boeing spokesperson did say that they are still planning to increase 50 airplanes per month. This is in the 2025 to 2026 timeframe. This is according to a Boeing spokesperson. Just showing you Boeing, which is all sessions on the IG platform there, it's currently down 0.2%. Finally, I also want to take a look at the oil outlook, because we have seen that oil is continuing to fall. Just bring up crude for you. There you can see it. We're still seeing this downtrend still in play here since the beginning of around October, November time. And what's interesting, if we look at September 28th, we're seeing this trend channel, really downward channel, really still persisting. We've had some breakouts, some resistance points hit at around 6,944, and it's bumped up slightly there, but not by much. Even after OPEC Plus delivered on the plans to try and curb output for a bit longer. Victor Katona, lead crude analyst at Kepler, saying that despite OPEC Plus's members' pledges, they see total production from OPEC Plus countries dropping by only 350,000 barrels per day from December 2023 into January 2024. That's 350,000 barrels per day from December this year into January next year. And just before we go, a quick snapshot of Wall Street, which is what we use on the IG platform. Pretty much mirrors the Dow Industrials, and we're seeing it taper off slightly there. Let's give you a minute view, because that's probably more exciting. There you have it after that figure. US stocks indicated to extend declines after that stronger than expected jobs report signaled that the US labor market continues to be resilient, and this is weighing on hopes of an early US interest rate cut next year. And that's it for this edition of Beat the Street, the show that follows the trading action, helping you position yourself ahead of the open. For more trading insight, follow me on @IGCom and @Angeline on Twitter. This is IGTV.